The Finance Committee, 7 minutes.
Thank you, Presiding Officer. It is with pleasure that I speak on behalf of the Finance Committee in this Stage 1 debate on the Land and Buildings Transaction Tax Amendment Scotland Bill. I would like to thank Finance Committee members, the clerks and those who gave evidence to help us reach our deliberations expeditiously, along with our adviser, Professor McEwen, who produced an excellent summary of the responses whilst working to a particularly tight deadline. Following publication of the UK Autumn Statement, in which the Chancellor set out plans to introduce a 3% stamp duty land tax supplement on the purchase of additional homes from 1 April, the Scottish Government set out similar proposals in its draft budget. The Government has emphasised the need to introduce a supplement at the same time as it comes into force in England and Wales to mitigate the risk of any related impact on the Scottish property market. And this meant the usual consultation process could not be undertaken, and standing orders were suspended to facilitate a truncated timetable for parliamentary consideration of the bill. Whilst the committee notes that these circumstances were far from ideal, we recognise the reasons behind them and accept there must be an element of flexibility in the scrutiny arrangements. In essence, there is a need to balance the risk of not responding immediately to UK tax changes with the risk of unintended consequences from enacting legislation without first conducting full consultation and comprehensive parliamentary scrutiny. The need to achieve such a balance is clearly an issue of real importance to Scotland's public finances and one which may arise more frequently in the future. We intend to reflect carefully on this before setting out recommendations on how best to balance these competing priorities in our legacy report. We issued our own, albeit shorter than usual, consultation exercise and received over 50 responses ranging from professional bodies to individuals concerned about the bill's potential impact on their own property dealings. We then took evidence from a range of stakeholders before hearing from the Deputy First Minister. Turning to the bill's policy objectives, the key intention is to ameliorate any potential market distortions arising from the proposed UK supplement, which would impact in particular on first-time buyers. Concerns were raised by some stakeholders that no impact assessment had been undertaken and there was a lack of data on the Scottish second home and buy-to-let markets. We therefore recommend that the Government commissions research and take steps to improve the level of data available in these areas. Ministers should closely monitor the supplement's impact on the housing market and conduct a comprehensive review once sufficient information is available. Now, following on from this, we also recommend that the Scottish Fiscal Commission should provide a commentary in the first 6 months of the supplement's operation, including the impact of forestalling by the end of November. And I note that today the Deputy First Minister is suggesting that 1 full year's data would be more appropriate, and that's something we will deliberate on. We had mixed views on the policy's likely impact on first-time buyers, with concerns expressed that the supplement would act as a deterrent to investment in new housing developments. Others suggested that with a supplement not introduced, investors from outside Scotland could push up property prices. Whilst recognising the Government's policy intentions regarding first-time buyers, the committee was also conscious of the need to protect housing supply for those who rent their homes either through choice or necessity. We heard that the vast majority of landlords own fewer than 5 homes, with large numbers owning just a single buy-to-let property. Concerns were raised that not only could the supplement deter investment in housing, it may simply result in additional costs being passed on to tenants via higher rents. Again, we consider it essential that the Government closely monitors the supplement's impact on rent levels, particularly in areas where rents are already high. To mitigate the possible deterrent effect on investment in Scotland's housing stock, numerous reliefs were suggested by stakeholders. Unfortunately, it was not possible for us to scrutinise every proposal in the time available, and we remain conscious that exemptions and reliefs have the potential to provide loopholes and opportunities for tax avoidance. We therefore invite the Government to comment on the stakeholders' suggestions. The committee was convinced of the case for introducing certain specific reliefs for registered social landlords, local authorities and student halls of residence. Not only is the availability of quality, affordable housing for those on lower incomes a key challenge facing Scotland, we also heard that many local authorities and registered social landlords have engaged in significant house purchase activity. This has helped support the construction industry during the period of recent market recovery. In respect of student halls of residence, it is clear that they are designed such that they are unsuitable for anyone seeking to buy a home. We therefore recommend that relief should be introduced for both types of properties, and that should mirror those reliefs provided for in the original LBTT Act. Another proposed relief which we support is for larger scale investors purchasing 6 properties or more. This was suggested by numerous professional bodies and is consistent with the provisions of the original LBTT Act, which states that where 6 or more dwellings are the subject of a single transaction, then they are treated the same as non-residential property for tax purposes. The UK Government consultation seeks views on reliefs for bulk property purchases, and we are mindful that the provision of such relief south of the border, but not here, could adversely affect investment in the Scottish market. Furthermore, we consider it unlikely that such a relief would cover small-scale investors who are more likely to be in direct competition with first-time buyers to purchase existing properties. Nevertheless, we remain mindful that this relief may need to be reviewed if there are signs of a negative impact on the number of new housing developments due to a decrease in the number of buy-to-let properties being purchased by smaller investors. We are also clear that a grace period should be provided to cover unintended circumstances where a purchaser may temporarily own two properties simultaneously as a result of a sale being delayed or falling through. I am pleased the Government has confirmed its intention to amend the bill to introduce these reliefs and look forward to discussing them further with the Deputy First Minister in next week's Stage 2 proceedings. Presiding Officer, in conclusion, the Committee supports the general principles of the bill, but remains conscious that whilst the proposed supplement may appear relatively straightforward, a number of potentially complex issues remain which will require careful consideration at Stages 2 and 3. In particular, there is a need to ensure that appropriate reliefs are introduced which balance the needs of first-time buyers with those who rent their home and with the interests of house builders and investors. This will not be easy, especially given the lack of sufficient data on the current structure of the housing market in Scotland. It is therefore essential that the impact of this bill is closely monitored and a comprehensive review carried out once sufficient data is available. I look forward to considering these important issues further at Stage 2 and hearing the contributions of other members to this debate.
Thank you, Mr Gibson. I now call on